Hey guys, Toby Mathis here, and I want to put on the screen an X post that I came across. It says, when my son is ready to buy a house, we'll loan him the full purchase price. He'll make monthly payments to us, 30-year mortgage at 0% interest, thanks to the bank of mom and dad. Had over 2 million views, so like it actually hit a chord, because a lot of people think that's what they're going to do. They're going to make a bunch of money and I'll just loan my kids. The IRS has different plans for you. It is IRC 78772, which is imputed interest. And what that is the IRS says anything over $10,000, if I loan it, family member, related party, does not matter. Even if I say 0% interest, you have to pay tax as though I paid you the interest. So let me make this real. Let's say that you loan your son, so that's actually this situation, a 30-year loan. Let's just say it's interest only to make it easy. The federal AFR rates today, as I'm standing here, this is April of 2026, is 4.62 annually on a long-term loan like that. That is the imputed interest, which means even if it says 0 on the note, this is the amount the IRS requires that you pay tax on. So this is just like the son is paying mom and dad interest at 4.62. Let's say it's $400,000. Then the annual amount of interest, let's say, so it's an average, so the loan is 400 grand. It's a regular house. So mom and dad loaned son 400 grand. The imputed interest, the amount of interest that mom and dad have to report on their tax return, even if money wasn't paid, you still have to report it, ends up being $18,480 a year. And the IRS says, here's what happened when you did that 0% loan. Son paid you $18,480. You gifted that amount back to son. And I'm going to write this up so you guys can actually see it. So let's say it's 400 grand, mom and dad loan to son. So there's a loan to son. The 4.62% is the 426 AFR rate, annual payment, long term, which is $18,480 a year. Other numbers you need to be aware of. You can gift a recipient in 2026 $19K a year, so $19,000 a year without having to file a gift tax return. So in this case, we're underneath that. But remember, this is per person, per recipient. So mom and dad could, in theory, give a son, it looks like, up to about a $800,000 loan with imputed interest and not have to pay gift tax. Now you have this huge amount of lifetime annual exemption. It's over 15 million, 30 million for a married couple, but you still have to file a tax return if it goes above that. So what is going on here is mom and dad loan that to son. Son is paying to mom and dad. This is taxable. So just figure out, if mom and dad are in the 20% tax bracket, they're paying an extra, they're paying every year $3,600, $4,000, whatever it is, in tax. They're having to recognize that as taxable income because they gave their son this 0% interest loan. Even if it was below that 4.62, it's going to be 4.62. Like, this is the imputed interest minimum amount on that loan. So it gets kind of ugly, right? Pretty quick. Like, we thought we were doing something really good, but I had an unexpected consequence. So, if you do this, I'm just going to say there's a right way and a wrong way. See, son is treated as though he paid that. So he might have a mortgage deduction. This is where it gets really weird, right? So son may actually get a deduction. Parents may actually end up with a tax bill. Oops. That's why you always talk to a tax person before you do these types of transactions. But if you're doing this, then I would just say this. There's really kind of 4 things that I'm going to say that you're going to need. Number 1, is you want to actually have a note. You want to have a documented note on the property. Mom and dad are loaning son this money. What happens if something happens to son, incapacitated, passes away, has a rabid, like ex-spouse or business partner he's getting sued or whatever? The last thing you want is there to be question as to, well, is this really his money or is this actually a loan? So you document it. Needs to have a note, needs to have a deed of trust. So the second thing is document it against that property. Otherwise, somebody could take that property and you're like, hey, wait a second. Yeah, I loaned my son the money on that and you just took it away. Or a son gets a second mortgage on the property and now he owes you money in theory. And which, again, this is a loan. You didn't say I'm gifting him the money for the house. He's like, hey, it's 400 grand at 0% interest. So you still want your 400 grand back, or you don't want someone to take the house, or you don't want your son just to be able to refi the house and take the money. So you want to make sure there's a deed of trust against the house. You want to make sure that you are reporting that income every year, that interest income. It is imputed, and you're going to document it. Number 4 is you're going to make sure that you document it so that your son, if you're doing this, what has really happened is your son paid you $18,480 and you gifted it back to him. Even though no money changed hands, that's the way the IRS is treating it. And if that's the case, okay, IRS, since you're going to give me a smack on this, you better get the benefit. And if you want to be able to write that off, I'm not saying you have to issue out a bunch of tax forms. I don't even know how you would do that. Technically, I guess it would be a 1098. What you want is to make sure that you have a documentation of, here's the amount that we are going to impute as interest, and give a statement to your son so your son can take the mortgage interest deduction if he qualifies, depending on whether he's itemizing or whether, how where it's going to go. Is it better than the standard deduction? Maybe so. And if it is, you're leaving that tax break on the table. So yes, you're giving your son a great, huge, it's literally a gift. You're getting hit annually with a little bit of a tax hit. He's getting a benefit from a tax standpoint. You want to make sure that you're getting that tax benefit so it's not all for naught. All right. If you guys like this type of content, like and subscribe. I'll put some more videos that are relevant to estate planning so you can watch them next. Thanks, guys.